Keith, great to have you on. You were also on the panel yesterday. You were also feeling quite bullish about the consumer. What are you seeing?
You know, I remember on the height of the pandemic, we were talking about what the future of travel was going to be, and travel is back. And I don't think we should be surprised by that at all. When you think about the impact of the pandemic on the consumer, it was the greatest demand suppression event our industry has ever seen. People couldn't travel, they couldn't leave their homes, but it was also a demand creation event for goods. So people couldn't travel, so they bought a new television, they renovated their home, and now we're seeing as things normalize, demand's normalizing. Going back into services, going back into travel. So you think about how many...
So you're explaining the Target guidance cut today and the fact that your business is booming. It's true. People just, they're prioritizing, right, where they want to spend.
Without question. I mean, think about how many family reunions were missed. How many weddings got postponed 2 years? How many meetings that took place every single year that got moved, and conventions? That's all beginning to happen now.
But the question, Keith, is how long that sort of pent-up demand surge can last. Because it was temporary on the way down, and there are thoughts that it could be temporary on the way up, especially if we go into a slowdown or recession.
When you think about how healthy the consumer is, you know, $2.5 trillion more on their balance sheet, corporate balance sheets are still quite healthy, and we're still early days of the corporate travel recovery and those meetings and events and conventions. So we're really seeing a lot of forward momentum in the business. It's going to be a great summer. I think we're going to continue to see for the rest of the year that demand continue to grow here in the U.S. Now it's accelerating in Europe, Middle East, and Asia. And the only really big challenge right now, of course, is Greater China.
Yeah, what is it like there? You've got, how many hotels do you have there?
We have 600 hotels open, another 400 or 500 in development right now.
Are they open at this point?
We have the vast majority are open, but some are quarantine hotels. But I've talked to the team regularly. Shanghai has reopened. Beijing just reopened. We're seeing now bookings come back. And what gives me confidence, if you remember when Shenzhen shut down in southern China, business went away. But in about 90 days after it reopened, business was back to normal. And so when restrictions are lifted across China, it's going to be a real strong market again.
So the question, another question, is international travel and cross-border travel into the U.S. We talked a little bit about this yesterday. Seema Modi's been doing great reporting on intentions. The idea that you have to test to get into the United States, how much do you think that is hurting demand for travel into and out of the U.S.?
I think it hurts demand to some degree because it's quite frustrating. We were talking the other day, the fact that you're having to sit at home, do a video test, and then upload it and fill out different forms, that's out of step with the rest of the world right now.
Yeah.
And it's easy to get into Europe, and that's why you're seeing demand to Europe is booming. London is back, Paris is back. New York's doing quite well, but it's domestic in orientation right now.
What about pricing? We've talked a lot about how you guys certainly have pricing power. The demand is there. How much of it is driven by higher costs? You're having to pay higher wages to attract people, and prices for energy and everything else is up. And how much is just the fact that you are able to do so because demand is so strong?
It is the true basic economics. The demand is so strong in so many markets that we're having the ability to price. But effectively, we haven't even been keeping pace with inflation, though. So on a real basis, we actually aren't even there too. So there's still more pricing power in this business moving forward. And demand will continue to come throughout the summer, think into the autumn as well.
So you have Holiday Inn, you also have Six Senses, very different price points. Is it across the spectrum? Are you seeing a weakness in the lower income?
Actually, some of our strongest brands throughout the pandemic were Holiday Inn Express, Staybridge Suites, and Kendall, with those mainstream brands where it's actually kind of non-discretionary travel. People who have to travel to do their jobs, going to a manufacturing plant to go work on it and do those repairs. And at the top end of luxury and lifestyle, there is no pricing resistance at all. I have never seen resorts in destinations be able to price like this, and that's going to continue for the foreseeable future.